and welcome to the Virtual Business Owners Network on Friday, the 1st of March. And I'm delighted to present today's speaker and giving us a lovely presentation on how to get approved for business finance, learn about the different types of finance for different requirements, and learn about alternatives to bank. I'm delighted to welcome to the group today, Rupert Hogan. Take it away, Rupert, and can I ask you all to go on mute while Rupert's making his presentation? Thank you.
Well, thanks very much for having me along today, Alec, and to everyone at VBON. It's lovely to meet you and have get a better understanding of what your businesses are like. My company is Businessloans.ie. Can I ask you, Alec, is my screen sharing okay for my presentation at the moment? Can you see that on your screen? Just to check, can you see my screen at the moment? Am I sharing it successfully?
No.
Unfortunately not.
Okay, let me try. Okay, sorry, I'm not an absolute expert on Zoom, so to share my screen, let me see.
Alec, you're on mute there. I know you're trying to talk.
That makes a change. Everybody would be delighted I'm on mute. Rupert, there's an arrow, green arrow down the bottom. If you hit that, you should have to share.
Green.
Okay. Green arrow at the bottom. Oh yeah, I'm sorry. Got it now.
To a round of applause, Alex mutes himself again.
Okay, thank you very much for your patience here. So hopefully you can see all that now. My company is Businessloans.ie, and what Businessloans.ie is, it's a broker for business loans. It's mostly focused on non-bank lenders in Ireland. So that would be, there's a whole host of unsecured invoice finance, asset finance, and so on and so forth. So the key thing is, generally I'm turning around quotes in about 24 hours rather than the banks, which sometimes they're taking weeks or months to come back with an approval. So it's usually faster finance, usually a percentage point or two higher than the banks, and that's the area where I'm in. So here are some of the lenders who I would work with. So they're debt funding mostly and non-bank lenders, and they range, you might see some of these logos, you might have heard of some of them, but they range from Linked Finance, which will be one of the more popular ones, to ULend, who are a merchant cash advance lender, and so on and so forth. So the main area that I'm focused on is speed and convenience, because sometimes a lot of businesses have a lot of loans out already, or the bank is just taking too long to come back with a decision. So generally, like if somebody gets documents in, it's a limited amount of documents that they need to get, and the paperwork requirements are lower. So turnaround is usually 24 hours for a quote. So here are some of the debt funding options that I would help with. So mostly people contact me about simple unsecured loans. That's a term loan over 1 year up to 5 years generally. Other businesses are in the hospitality trade. They're using a card machine. They're an e-commerce business, and they have a merchant account. So there's loans that are easy to get that are based on the turnover that people are doing on their card machine. There is invoice finance. So as soon as a business is getting going, starting to build that book of debtors, there is one-off invoice finance where they can just cash in invoices from reputable debtors when they need to, or there's ongoing invoice finance arrangements once they've built up a big book of debtors. Similarly, there's trade finance, and trade finance is similar to invoice finance, except sometimes you can get your purchase orders financed if you're waiting for stock to come over from China and you're tying up your cash flow for weeks or months. That kind of stuff can be useful there. Asset finance is another area where businesses need machines, vans, equipment, and so on and so forth. And there's hire purchase and leasing, which basically gives access to bigger credit limits because the lender has security on that asset. Some businesses are low on cash and they've bought a lot of assets out of working capital. So they can refinance those assets and extract working capital for the lifeblood of the business as well. And then finally, I help with property finance around property developers and construction and that kind of thing. So just running through a couple of examples of clients who have helped during the week. Here would be a client who is in the logistics area, and they have really high turnover, but their accounts profitability is quite tight. So this is hard to get an unsecured loan where you have a tight profit. However, decent turnover fits for a type of loan called a flexible repayment loan. And generally, the lender has a bit more comfort that they can take a daily repayment. They take lots of tiny direct debits throughout the year. Their goal is to get paid back in about a year. And once that loan is paid down about 70%, they can usually come back for a top-up loan again. So it's a higher risk loan. It's about 1% cost of funds per month, or 12% per annum is roughly the kind of interest that they're in for here. Here's another client that I helped this week. It's a cafe. So they needed a new location and a new fit out. Their accounts were not so hot. So they had maxed out their exposure with the bank. The bank had told them, look, you've reached your limit of exposure. We're not giving you any more loans. But they're doing loads of business on the card machine like any cafe business would be doing. So they were able to they were doing about 50 grand average sales a month on the card machine. They needed about 50 grand. So that fitted with this type of finance, and they're able to get a flexible repayment. So the way the loan is repaid is every day there's a total on your card machine, and they take a fixed percentage deduction. So they might take 15% skim off your card machine total every day towards the repayment of their loan. They set that percentage so that the loan is paid back in about a year. And that's how that card machine finance kind of works. It's a flexible repayment. So when you have a bad day, you don't pay back too much. When you have a good day, you pay back a bit more because it's a fixed daily deduction percentage. Another client I helped this week was a seafood exporter. So this business has an aspect of buying and selling seafood. It also has some boats on the water, and its main export was to China. They're expanding into new markets. So they have a bunch of loans out at the moment. They were struggling to get an extra loan from their bank. And I went to one of our non-bank lender partners, and they were able to approve them for 150,000 euros. It's about 9.5% interest. So it is a bit higher risk than maybe the 7% they might have got from the bank. However, the bank was not doing any more, and this 150 grand was needed to expand into the USA market. So all they needed for paperwork was bank statements, accounts, and a tax clearance cert. And they have no early repayment penalty. So even if this interest rate was a bit high, during the 3-year term, they can exit that loan anytime penalty free. And they were happy enough to take that loan. So a lot of people ask me about startup finance. Startup loans are not exactly an area that I help with, but I just wanted to give a few tips here just in case you're setting up a new venture. So the main thing is there's a bit of paperwork involved. You need to put together that business plan. You need cash flow forecasts. You need details of contracts or works in the pipeline to give to the underwriters. But the key thing my banker tells me is you need to demonstrate that you have skin in the game. And that means that compared to what you're asking the bank for, you want to demonstrate that you're committing about 30% at least of your own funds, assets, or other items into the business, where the bank is not financing 100% of your venture and you have no skin in the game. So businesses that the bank understands are easier to get financed. So that could be, an accountancy firm or a restaurant or a fairly ordinary business. If it's a high risk business, like you have an idea for an app or a tech business or something like that, it's really, you're probably going to get a decline from the bank. It's going to be an equity raise that you're looking for there. And the local enterprise office has a start your own business course, a business plan writing course, and there's all kinds of supports from the local enterprise office there that are worth engaging with. There are also simple unsecured loans. So I'm just going to run through a couple of different types of loans that I help with. The primary one people contact me about are simple unsecured loans. For this, generally, you need to have about 1 year's set of accounts done, filed with the company's registration office, or sole trader accounts done with a profit and loss and a balance sheet. The underwriters will do a risk assessment on those documents, and the rates will vary depending on the risk assessment and also the length of term. So if it's a 12-month A-grade loan, it might be 6%, or if it's a startup loan that's looking high risk, it could be up to 16% or so. So generally, to get a pass, you need to have profit, you need to have no missed payments, and you need to have your tax paid. For the purpose of funds, it determines the length of term. And if it was a stocking loan, you might be lucky to get a 12-month loan. And if it was something else, like fitting out a new premises or something like that, that might get you a 5-year term. So working capital is really a 3-year term if you just want to keep it general, and that's quite achievable. Unsecured loans have no early repayment penalty, and so on and so forth. There. Now, I just wanted to check at this point, everybody can hear me okay. I've got no questions back so far, so I just wanted to confirm that everybody's hearing the presentation so far. Thumbs up. Okay, perfect. Perfect, thank you. So another type of loan that I help with regularly is merchant cash advance. So that's basically any business that's using a card machine for taking payments. So that's your shops, that's your restaurants, that's your everyday business that using a card machine. It's also businesses that are in e-commerce that are using a merchant account like Stripe or PayPal. And all this data can be used for a merchant cash advance. So the rule of thumb is the loan size that you can get is whatever your average sales is per month by your merchant account. That's the max loan. So if your restaurant or your shop was doing 10 grand a month on the card machine, that's a 10 grand loan. If you're doing 100 grand a month turnover, then it's a 100 grand loan. So the rule of thumb is whatever your average turnover is, that's your maximum loan here. Sometimes your accounts don't need to be in profit to get this loan. If you're a decent turnover business, sometimes you can have a payment plan with revenue and this will still pass. And you need to be trading as little as 3 months for this loan to work. So even if you have 3 months trading statements, a loan is possible. So the way this loan is repaid, it's a factoring cost. It's a kind of a bet against your future sales. So if you took €1,000 and they set the factor rate at 1.15, you're going to pay 1,150 back. So it's a fixed amount that you're going to pay back. And generally, you're going to pay that back within 12 months. So they will set a percentage that they feel they're going to get their money back within the 12 months. And it's a fixed daily deduction. So it's a flexible loan. And if you imagine that you're a hotel in the west of Ireland where you have a seasonal business and winter is quiet, summer is busy, you'll pay back more in summer, you'll pay back less over winter. And overall, the lender is going to get their money back. So that's the merchant cash advance. It's one of the easier ones to get for an earlier stage business. Moving on from there, we have the flexible repayment loan. And this is a newer type of loan, and it's a bit like merchant cash advance. However, it's for businesses that are not using a merchant account, but they have really good cash flow across their bank statements. The key reason this loan came about is because there's an open banking connection. So banks these days have to open up their systems to give a data feed out to other types of lenders to be more competitive in the marketplace for lending. And the applicant here is going to make an open banking connection, and the lender is going to be looking at their 12 months bank statement history. So these businesses might not be fully profitable yet. They might only be trading from 9 months, and they have decent cash flow. So they need to be turning over at least 20 grand a month for them to be eligible to try this. It has a daily percentage repayment. So over the 12 months, it's going to take these tiny little direct debits, and these are going to be tweaked. The algorithm is looking at your 5-day average on your payments. And so there's no spiky repayments, and it's smoothed out, and they're tweaking the repayment. But the main goal is that they're getting their money back within 12 months plus their premium. And generally a top up is available. So once the loan is paid down about 70%, you can say, hey, lender, please, can I have a top up now? And they'll be looking at what your cash flow is now, and they'll give you a new top up if you want it. Now, the cost of funds is a bit more expensive for this. It's higher risk. So it's about 1% per month or 12% per annum generally for this type of loan. But it's readily available for earlier stage businesses. Invoice finance is another one that's easy for businesses that are starting out. And there's one-off invoice finance and there is whole book debtor finance. So basically, the key thing is you're raising invoices to reputable businesses. These are B2B businesses, not consumers. You're not selling solar to some consumer or something. It is a reputable B2B business that you're raising an invoice to. The cost of finance is going to be, for the one-off stuff, it's probably going to be about 1% per month, unless it's quite a strong business. So it's around that kind of cost of funds, 0.8 to 1% per 30 days. Generally, the lender might give you about 80% of the value of that invoice today, and then you'll get a final settlement when the debtor pays. So if the debtor takes 3 months to pay, that might be a 3% cost of funds deducted, and you get the rest. So that's how invoice finance generally works. A lot of companies need asset finance, and this is easier when you're starting out because the lender has a charge on the asset until the final payment is made. So a lot of this is businesses needing machines, vehicles, and equipment. Even companies like dentists and things like that need expensive equipment, and it can work for them. So there's two different types. You got your hire purchase or your leasing. It depends on what your accountant's advice is. Generally, with leasing can be set up where it's a bit like a rental, but there's an opportunity to buy it out for a nominal payment at the end. So they're much of a muchness. A lot of the lenders want you to pay a 10% deposit or so to a dealer. So you need to find a reputable dealer that the lender is comfortable doing business with. It can't be something from Done Deal. And there's heaps of used things that are possible to get from dealers on asset finance. Generally, you can get quite low repayments then, up to 7 years. You can push out the length of term, sometimes 7, even 10 years, depending on the asset. A lot of companies at the moment are getting SBCI loans. So that's the Strategic Banking Corporation of Ireland. Basically, they have EU money, they have government money that's funded in to these schemes, and then lenders become part of these schemes, so they get access to cheaper funds and better conditions for borrowers. So these are usually for specific reasons. You get lower rates, you've no personal guarantees. So just about any loan in Ireland, they're going to ask you to sign the personal guarantee, and a lot of people don't like to do that. So a lot of the SBCI loans have cheaper rates, and you don't have to sign that PG. So a key one that I'm helping with at the moment is the Ukraine Credit Guarantee Scheme for unsecured loans and for asset finance. And you have to be affected by the war, but it's quite easy to demonstrate how your business might be affected by the war because of inflation on utilities, on diesel, and all kinds of different things. So the key thing is generally you need to demonstrate a 10% increase in cost of expenses in recent years due to Ukraine war. So you would go onto the SBCI website, you get an eligibility code and apply to the lender. Or else you could just apply to the lender first and then try for the eligibility code later and just get a sense if you're going to get approved or not. So there is another SBCI option at the moment for green initiatives, and that is for getting things like solar or energy reducing things. And there's plenty of cheap finance around if you're prepared to jump through an extra few hoops to get the SBCI eligibility codes and that kind of thing. So here are a few tips I have for getting approved. Key thing is your management of your bank statements. So keeping a steady minimum level of cash in the bank is key. So keeping an eye, never let the bank statements go so low that you start bouncing payments and getting referral charges, because that's a key sign to the lender that they will become a missed payment as well. And it's most likely for an unsecured loan, you're going to get a decline if you have missed payments starting to stack up. So it's best to get finance before you even think you need it, rather than letting it get too late. Another thing is a lot of businesses call me up and they go, oh, I've loads of cash business. I have a really good business, but I'm running at a loss, or I'm running the profit really tight. That's well and good, but from a lending perspective, if there's not much profit there, they don't really care if there's a secret bit of cash off the books or whatever you have going on in the background, and they need to see that profit on the books and all squeaky clean. So keeping the business running at a bit of a profit is going to be key. Keeping accounts up to date with management accounts or draft accounts. Like a lot of the time now, people have 2022 sets of accounts that are a bit too old. The data is old and it gives lenders cold feet. So if you have a good accountant who's keeping up to date management accounts, that's going to help you out a lot. Another thing is presenting your purpose of spend. it needs to be a positive to grow the business. So it could be something to buy equipment, hiring new staff, marketing campaigns. But if it's something that's negative, like a lot of lenders don't want to refinance a big debt buster loan. They don't want to pay off some director who you want to buy out. It's not necessarily going to grow the business. So keeping the purpose of spend is something presentable for a lender is going to be key there as well. So that is my presentation, and I hope you enjoyed it, and I'm opening for any questions and all the rest now as well.
Thank you very much, Rupert. I'm just going to stop the recording there. And just while we're just getting ourselves together, I'm putting a link in. Some of you didn't register for today. It's not obligatory, but just in case you missed it, please use the link there. And then you'll see who also attended. I'm not sure we have time for questions today, but Rupert, will you put your details in? Sorry, John, we're just running a bit behind. Will you put your details in? People can find out, and I'll follow you up about asset finance. I know somebody who's particularly interested in that, and it's quite a sizable piece of business. So I'll follow you up. Can I thank you very much for that? In terms of who attended here today, let me just give you that bit. So if everybody, I'll just go in and see who has attended today. Is everybody there? Bang. Okay, not everybody's registered. That's fine. That's fine. You don't have to. And here's a link for who has attended here today. And I'm going to put in the one-to-one links after that. I'll explain that to our new guests here today. There's a link in that tells you who was here today. And Sean has kindly, who looks after this side of it, put in the one-to-ones. And this works in a very simple way. If you want to meet somebody, look at the left. If you're on the left, you make contact with the person on the right. I'm just putting that in. Sorry if that came to me. No, that's not it. Good. And then we go straight into the breakout rooms. And again, thank you very much, Rupert. There was a huge amount in there, and I don't know how you fit it all in so quickly, but very concise. And we'll put that video up on our system. And there's the one-to-ones. And while you're all pressing buttons all over the place, I'll open up the breakout rooms. And really for Peter and for Harshal, this is all about just getting to chat to the people in the room. There's no hard sell here. Just who are you, what's going on? And everybody gets an equal time. And we'll come back in just before 11 to wrap things up, because we like to finish on time. We may not like to start on time. And people keep putting their hands up. Why are you putting your hands up for? Go on.
Very quick one for the people that are new, Alec. You didn't say who contacts whom in the one-to-ones.
I did. You weren't listening. I said the one on the left contacts the one on the right.
I'll shut the hell up. Thank you.
And John, you still have your hand up. Is there any reason for that, or can I take your hand down?
Mute.
John, you're muted.
That's all right.
No, you're okay, Alec. I'm fine on that. But I want to talk to Rupert about a few things at some stage.
Fantastic. So he's put in the details there and have a chat offline. Great. There's all the rooms. If you go into those, I'll join you. The unlucky ones will be the one I join. There you go.
Yeah, Alec.
Have you joined a room?
I'm connecting to you as per the spreadsheet.
No. That's after all of this. On the spreadsheet, you contact me. You have a breakout room number 4. I see assigned to you there. If you go into that, you'll be able to meet the others that are there.
Oh, got it. So in breakout room, there are only 2 people. So is that supposed to be a 3 people get together?
Yeah, 3 people in there. So you go in and join them. Sometimes there's 4 in there. Maybe I've opened up too many breakout rooms today. So you go in and have a chat with a couple of people that are in there. I might join it in a minute. I'll see. I might have to go into the other one. So you go in there, join breakout room, and just introduce yourself and have a chat. Sorry.
Oh, really?
Anyway, I hope you